in Aadil Zaman, partner at the Wall Street Alliance Group. Aadil, good to see you. You have optimism, it seems, judging by your notes, that this market can continue to rally.
Great to be with you, Oliver. So, Oliver, we think the market is going to bounce around at these levels because, on one hand, we have these horrible geopolitical concerns. But on the other hand, we have fabulous earnings. Last year's earnings went up by about 35%. And what we are hearing from our clients at Wall Street Alliance Group is that 8% inflation makes sitting on cash too expensive. So stocks are the only game in town. And that is why what you're seeing is that these pullbacks in the market are relatively shallow. And we do feel that in the long term, equity markets will continue to go higher.
Okay. What type of equity markets? Small caps, giants, value, growth? This market has gone through periods where it's completely two-faced, and your winnings depend on which side you were on.
A great question. So, Oliver, we think that, and this is what we are advising our clients at Wall Street Alliance Group, is that it's time to have a barbell approach, right? So you want to be invested overweight in US equities because United States is the best house in the neighborhood right now. You also want to have a little bit of China exposure because things seem to be improving over there with their focus going back into stabilizing their markets as opposed to doing the crackdown. But at the same time, you also want to be a bit defensive and have exposure to things like utilities, which tend to do well when things go south. So having an overall diversified barbell approach, in our opinion, is the right strategy in this environment.
And how much does that deviate from the S&P 500's tech exposure? That seems like the real core question at the end of the day is, do you want more or less of the same of what's already baked into a passive fund?
I think that as far we feel that this is the year for individual stock selection. So where your exposure might be to technology might be equal weight, but the quality of technology exposure really matters over here. So for example, this market has come down, but there's still some great buys in the large cap sector. So if you look at Amazon, if you look at Google, these are fantastic companies reporting great earnings. But year to date, these stocks are down. They've announced stock splits, which could potentially mean that they could be included as candidates in the Dow Jones Industrial Average. So we see those type of selective opportunities, and we feel that individual stock selection is very important here.
If we're doing individual stock selection and picking Amazon and Alphabet, sounds to me like it's probably a lot cheaper to just buy an ETF, Aadil.
I think that, at times buying an ETF makes sense. So for example, one of the areas that we are looking at right now is China. And right now with the Chinese markets, with the situation in Russia, their focus now seems to be moving away from cracking down on the domestic industries to more stabilizing their markets. They are also importing about 25% of the oil that Saudi Arabia is exporting. So what they're trying to do is they're trying to position themselves so that they can actually pay for that oil in yuan as opposed to the dollar. So we feel that that is indicative that the Chinese markets are bottoming out and will start to go up. And in that area, we would probably go towards an ETF as one of the exposures, which is FXI. But still, Tesla, Apple, these are great companies that have great China exposure. We like those as well.
Do you believe that the worst of Chinese pressure on its capitalist system is past? Was that a meaningful and sincere overture a few weeks back?
I think China got a little caught off guard with the sanctions that happened on Russia. I don't think they were expecting this war to go on for so long. So they want to be perceived now as a neutral player in this environment. So I think they're going to step back. They're going to change tactics. They still want to preserve their relationship with Russia, but they want their markets to be perceived as a market of stability. So I think they're going to change tactic, and their markets will start to stabilize, in my opinion.
Do you have a view on whether or not the U.S.-listed Chinese stocks will remain on U.S. markets, or will the SEC disapprove if they don't meet the fairly specific requirements they've laid out in terms of transparency and the auditing process of those businesses? Do you think that's going to break in which way, Aadil?
I think that China is going to make an effort. There's already some news about that today. I think China is going to make an effort to be able to be more transparent and continue to have those companies listed. But I think in terms of Chinese exposure, we feel that having a more broad exposure through an ETF is a wiser strategy because there's still so many uncertainties over there.
Okay. Aadil, thanks for the analysis and a good part of the market that we didn't get to yet, that ongoing China story. A little strength there today, bouncing to your point about maybe some positive developments in store here. Thanks a lot. Looking forward to next time.
Great to be with you.
Aadil Zaman is a partner at Wall Street Alliance Group.